Let's take a look at some information and charts on Ethereum Classic for Brave New Coin. So ETH Classic just had a network upgrade last month. Let's see how they're doing. Mainly for ETH Classic, what they do is implement previous ETH forks or ETH updates. They don't necessarily change or innovate on their own in a big way, for the most part. I don't want to diminish what the devs are doing or what they have done on ETH Classic, but that's truly the case. DeFi is probably thin on ETC. I couldn't really find too much on it. NFTs thin so far. All that stuff is pretty thin until ETH goes to proof of stake. ETC is currently proof of work, will probably remain proof of work forever. Until ETH goes proof of stake, ETC I think is just on a back burner for many people. And we'll see if it survives the mining migration once ETH flips over. And for those not in the know, ETC was birthed out of the DAO bailout, where basically a bunch of ETH got locked into a smart contract that was vulnerable, got hacked, and they ended up doing a rollback because it was a significant amount of ETH at that time. Some of the community members didn't like that. Barry Silver sort of pounced on it and said, okay, we'll support this monetarily with his big purse. Later on introduced the ETH Classic Trust on Grayscale. A percentage of this funding they collect goes towards ETC development. At least I think it still does. And it's one of the biggest trusts on Grayscale. Oddly enough, even though it continuously holds lately a negative 30% discount relative to spot that was at negative 37 or greater at some point in time over the past couple weeks. I don't know what it's going to take for this to flip back to parity and how many more times they're going to need to step back into this thing and bring it above negative 40. I don't know what the rules are on pink sheets. I think there just aren't any rules, basically. People can still get upset about it and be vocal about it, and that's basically what it took for them, Grayscale, to step in and buy a bunch of ETC. But anyway, if we look at the hash rate and difficulty on ETC, it's risen with price, so no real surprises there. Against Ethereum, I mean, it's no contest currently. 622 terahashes versus 24, So that's going to change dramatically once ETH goes proof of stake. And it looks like EIP 1559 has had no effect here on hash rate. No miners have flipped anywhere. And at 4 cents per kilowatt hour, there are still a couple ASICs floating out there and more coming to mine ETH and probably eventually ETC, should it continue to exist. ETC had some issues with 51% attacks as well. They've hopefully mitigated against that reliably with some changes in how the chain works. But a lot of the ETH hash, or ETH hash, I don't know how to say that, mining is done on GPUs, which is why if you're trying to buy a GPU, or if you've tried to buy a GPU over the past 2 years, they've just been way over retail price, especially the high end 3080s, that sort of thing. And miner revenue on ETC versus ETH is 1.4 million ETC, 49 million ETH today. So again, it's no contest, right? It's pretty clear why the hash rate sits where it sits currently. And if we look at the issuance, ETC is in the yellow down there, 5.8, ETH at 4.2. So it's even less holdable compared to ETH just based on inflation alone. Inflation, activity, price, fees, right? All these things play a role in why ETC is relative to ETH in the current moment. If we look at transaction counts, though, they've been rising, and along with price is no slouch here for ETC, surprisingly enough, relative to where it's been over the past few years even. So transaction counts rising, average transaction values went way up, but have since come back down to earth after that initial spike in May. NVT, inverse metric of economic utility relative to price, is just all over the map. I don't think there's a real signal here. And then active addresses, they were doing stress testing or something previously. Those have since flattened out, but even over the past few months, continue to rise along with transaction counts. MVRV, a direct measure of price relative to market cap. For most coins, this tops out at 2x, meaning the market cap can get up to 2x greater than on-chain activity before it's basically overbought too much and eventually pulls back. So previously it got to 2.4 in 2017. Then it had a bit of a bearish divergence here. You have a lower high in MVRV, a higher high in price. And then in 2021, again, we reached 2.2. That 2x magical level is telling you be careful, and you get a higher high in price again on lower MVRV. So more of a bear div there. Price pulled back. So what I'd watch for in the future now is anything above 2, and then anything after that where price goes higher and MVRV is less than 2. That's just an increasingly troublesome sign telling you, okay, it's time to sell. It's time to sell. Be careful. It's overbought. On-chain activity does not support what's going on here. It's time to sell, right? That's what it's telling you over and over and over again. Flipping to technicals, we have the 50 and the 200 EMAs in the red and the green. VP, VR, monthly pivots, volume RSI MACD. This is on Poloniex, which volume-wise maybe not tell you too much, but in general, volume over these past few months has been zilch, zero, nada on Poloniex. The 5200 cross has held bullish ever since late 2021, or late 2020, and along with everything else, altcoin ETC took off kind of later in the cycle, definitely at post DeFi. DeFi like peaked in February, March, and then the late rotation stuff, the typical things that haven't moved yet, the most started moving. That's kind of where ETC fits in that category. It's listed in a lot of places. It's listed on Robinhood. It's very accessible to retail and anyone in the US for the most part. So in any given cycle, any given alt season or bull run, this thing will move just because it hasn't and everything else has. I mean, that's just kind of what it comes down to. It did triple bottom near the 200-day moving average and shot back up again recently with everything else. No bear div just yet on RSI up here. MACD is just kind of flat. The 2-year MA multiplier in the red here and the, or sorry, 1 year MA in the green, 1 year multiplier in the red, and then a midline in the white. These were just some previous annotations. It's always funny to pull up a chart and see things that have played out that you put on there. But even though this thing was a messy head and shoulders, it definitely was Doom City after that. So it did hit its multiplier level, 50 plus, telling you, again, if MVRV isn't convincing enough, look to this thing because it's telling you, be careful all up here. And sure enough, that was the top, right? Maybe the bottom isn't as convincing. It's not the bottom, but a good time to buy. But you want to be a seller up here for sure. You don't want to be a buyer when it's way above its 1 year MA multiple. So it's currently at the midline getting denied. Downside support is around 25, significantly lower from here. Daily cloud is almost 100% bullish. Cloud isn't bullish yet, so it's telling you be careful up here for long stuff because you want a convincing trend to show you a bullish cloud before you long. So we're not quite there yet. This is also painting an inverted Adam and Eve and M double top. So that is also not bullish. So I'd be careful with any longs, even though it is above the cloud here. Cloud is telling you it's not ready yet. On the 12-hour, you can see that Adam and Eve inverted a little bit better. This was that triple bottom breakout that everything had, and it sniped the bottom on the 12-hour, telling you, if you weren't convinced at this diag, it's telling you here, bullish going breakout, bullish decay cross, bullish cloud, right? This is the type of entry you want to see with the cloud to be convinced that this thing actually has momentum to run higher. Against BTC, honestly, it looks pretty good, which is crazy to think. It had this insane W double bottom, had an insane Adam and Eve previously. It loves to W at the bottoms. Even here, this just crazy looking W's all over the place. So it had this W double bottom in our early 2021 5200 cross, and now it looks like an ascending triangle triple bottom type situation. Like I wouldn't ever buy this over BTC, but if it broke out above 0017, yeah, it looks decent. There's a huge zone here between 002 and 0022 basically. Tons of volume history back here on Poloniex. So if I was playing this in a big way, I'd be careful about that level, but this looks pretty good, honestly, in a vacuum. And then ETC ETH doesn't look as good as ETC BTC because you've got all of this volume on the way up. And really the big level is 06. 06 is the level to watch. Everything before that's just kind of junk ranging mess probably. But I'd watch 06, just put an alert on that, forget about it, let TradingView tell you when it breaks it, then it's worth paying attention to. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, a non-custodial portfolio management solution where you can send ETH or USDC or just watch what I'm doing. You can see AUM, performance, allocation, all the stablecoin yield plays I'm in currently on that fund, as well as all the trades I make, when, where, why. You can see 7 days ago I sort of moved out of BTC and ETH in a big way. They looked toppy then, they look toppier now. And that's why I'm sitting where I'm sitting here, positioned as such. That's all I have for this one. Dislike, comment, share, subscribe, and happy trading.